Okay, happy Tuesday. Let me do a real quick market wrap and I'll go over what I did today on the on my little fun trade here. I didn't put on any new positions other than FXC, which was mm, because I you guys will learn from my mistakes or whatever. I got greedy. But anyway, let me show you what's up with the market. Today, market closed. See how this went blue today? Not a good sign for the bears. Good sign for golden geckos though, because we wanted to stay in a range. If you're selling golden geckos on SPY, you wanted to stay in this range while vol collapses. All right. Um, why do I say not a great sign for the bears? I mean, of course, the bears would rather see this red, and of course, they like this going down. The bad news is, see how the OB unbalanced volume is way below its 30-day average? Well, the reason why it's its 30-day average because, of course, the unbalanced volume hovers, right around this blue line, the average. So whenever something pulls way below it like this, you usually expect it to kind of bounce back. That's how you get an average, right? So even when it's like, for example, see how that divergence got way, the gap got way huge like this, it always comes down, right? Well, the bad news for the bears is this is all the way down here. You would expect it to come back up a little bit, which will cause it to rise higher. And look at this, your slow stochastics right here. Bears did not want this. They want to see this red. They want to see this red like this cross the 50, and they wanted it to drop like this. That's not happening here. See, it's not happening. So that's why Tom was all frustrated today. I don't blame him. Me, I don't care either way because if it drops, I didn't, I'm being patient. I did put on an SPY position earlier, but now it's back up to 52. I'm still okay. I haven't rolled that 192. I have a 192 position on, betting that it'll stay above 192. I'm still fine. Um, that expires this month. I mean, in October, so we shall see. PBR, my PBR position is doing great because as you can see in PBR, I was short the 18 call, so I was betting that PBR will stay below 18 by expiration of this month. And as you can see, IB rank is still at 100, but I'm still making money because it's dropped all the way down to $14.19. So I made a really good bet there. Even if it comes back, see if it does bounce back, volatility will drop, and as long as I finish below 18, I make full max profit. Okay. Let's go on to the ES, the futures. It's after hours now, so this is what we have going on to tomorrow morning. So this red tick right here is from today. This red tick is, after the market closed. Okay, so the bears will be happy it's going down. Volatility is high. They don't like this. The bears want it to go down. I don't care. I want it to stay in this range. It'd be great for selling golden geckos, but I just want volatility to collapse. So we shall see what happens there. Um, the reason why I wouldn't mind it to rise again is because if it rises, vol will collapse, and I want this vol to collapse to make my money. Okay, so let me show you what happens when you get too greedy, though. You can look at my past. I don't know when it was. It was back in one of the other. Uh, I think it was last week, probably last week. Start from Monday. I don't know. I talked about FXE how it got up to 50% max profit, and I did not take my profits, but I would, and I didn't. So let me show you what happened. Here, on September 4th, I sold a golden gecko in FXE. IB rank was above 35%, and I was able to collect about 20% of the expected move. I got it for 59 cents. I sold it for 59 cents, so I collected 59 cents. To be honest, I put a stop order in, so if it got to double that around, I would cash out and protect my losses. Um, because and if you look at my post today, I put a link on why stop losses were used, and was there a game changer study? There was a study, and it went really well. So that's kind of why I do it. Especially if you can't watch the market all day, it's perfect. So remember now, here's the math. So I got stopped out, and I didn't have to. I collected 50% of max profit, but I didn't take my profit. I just figured I'll just hold it for expiration and bit my ass. Okay, so what I did was I bought it back. I sold it for 59 cents, right? If I buy it back for 59 cents, I don't make any money, break even, less commissions, right? I bought it back for $1.26. So how much did I lose? I sold it for, I bought it back for $1.26. I sold it for 59 cents, which means I really lost 67 cents on the trade. Okay. So then what I did today was because of these market measures that's been going on since around the 19th, if you look at September 19th, and you should watch all these, this one, this one, this one, this one, this one, if you want to learn more, expand your thing, look, and then this one, straddle stops, which was today, I believe. Anyway, they talked about how straddles really outperformed, and it's just interesting. I don't want to go into now, but basically all a straddle is this. I just selling the at the money strategy is where you're selling a put and a call really close to where the stock is trading. The reason why it works is because you can collect so much more money that you have a wider margin of error for breaking even, or a margin of safety. So anyway, so I'm down. What did I tell you guys? I'm down 67 cents, right? So what I did is I sold a straddle, a synthetic straddle. Actually, it's kind of like a golden. It's like a, I don't know. I gotta give it a name. I haven't. I'm just playing. Okay, and I collected $2.07. So I collected more money, right? So if I collected $2.07 and I'm down 67 cents, as long as I can buy it back for $1.40 or less, I break even. Anything below $1.40 I buy back is all profit. Okay, or I can double up really. Um, basically, okay. So let me show you what that looks like real quick. I'll do a backspace. I will click here. So here's a synthetic straddle. Okay, so a golden gecko, you would be selling the put here and selling the call here. I just set them up there and I squeeze them together, and that's how I could collect so much. Okay, so basically, if you look, here's 125 right here. If I sold the 125 call, I'm betting it'll stay below 125, right? So why would I do that when the stock is trading right here again? Well, because I could collect $1.04, which means my break even is all the way up here. Okay, not at 125. I also sold the 124 put, right? Look where it's trading. I was able to collect a whole bunch of money for that as well. So that's why my break even points are these larger green areas here. Okay, and I want vol to collapse. And then what I did was I did the synthetic thing. Then I bought the wings again to limit my losses. Okay, so let me show you what that looks like as well. I'll go back, click on this. So look, so now the most I can lose is $393, but the most I can make is $207, which is cool. I mean, even if I make half of that, you guys already saw my break even, right? I need to buy it back for at least $1.40, okay, and I make my money back, right? Anything below that is a profit, okay. So if I can buy this back for $1.03, you know what I mean? Oh, I'll do that for sure, okay. So let me show you what that looks like on Doe real quick. I'll go to trade page, FXC. So what I did was I did choose a strategy. I did the same golden gecko, right? And all I did was I squeezed these together. And how did I do that? I just went like this with, and I squeezed them till it wouldn't go anymore. Watch. There, see? And if I click it again, nothing happens. Just the wings get closer. See that? Just the green gets closer. So I said, fine. Then I just moved these back out to here, roughly. Okay? So look, well, whoops. Well, roughly the same, right? I can collect $2.12. I collected $2 anyway, right? And that's it. Here you go. Probably 54% prop, a little bit better, right? But I collected so much money. And that's kind of why I did that. So that's just for fun because I saw all those market measures. All right. As far as stop losses, why do I use stop losses? Is because if you let me go to this. All right. So that's what happened over here. I did not put any more SPY positions on because based on when I checked the charts, I already have these positions on already. So I don't know. I might do another one tomorrow, but I might skew it down to the bearish side, and I'll show you what I mean by that in a little bit. Okay. So as far as today, I had a question about somebody asked me a question about why there's stop losses as part of the golden gecko strategy. Because if you look, I put a link there. Here's a game changer that was done on April 3rd. You can watch the video, but here are the slides. And I'll just scroll down and real quickly. Here it is. What he did was he tested a strangle and a 100-point wide iron condor, right? and he compared management to limiting your losses to the credit received. So look what happened. Strangles with no management made 41 grand. Limiting losses to credit received is 53 grand. Average win, average credit, and here's your biggest loss. Okay, less than half, which is why I did it. Okay, I don't want to lose any money, and I don't want my loss, one loss, to take out all my winners. Okay, so that's kind of why I did it. And here's a graph right here. So, which is why, like, let's say you collect $1, I cap my losses at $2. So a dollar would break even, and I only want to lose $1. Okay. So anyway, that's what I did there. That was today's trade. So you can click on that link right here and go there. As far as tomorrow goes, here's the chart for the SPY. Here's what I mean, and I'll walk you through the exercise. I kind of want the market, like I told you, I know they're bearish, but see, I want volatility collapse from here like this. So anyway, for me to make money is for the SPY to go up a little bit, which will make vol collapse down, and I want it to stay in this range. That would be beautiful if it stayed in this range. Okay, so we'll see what happens tomorrow. Let's see what I can collect. Let's go back to Doe. We'll type in SPY, go to choose strategy. Here we go. Go to click, and oh, I'm sorry, let's check the strangle. Go to strangle, everything stays the same. It'll show here collect $1.55. Is that enough? Let's find out. Go to toss. Go to your trade page and toss. Check the same strangle at $9.84. Go back to your calculator. $9.84 times that by 0.198 for 19.8%. You want to be able to collect at least $1.94. I can't collect that. Does that mean you can't put on the trade? No. On an ETF, the market measure was if the IB rank was 35% or greater, you want to collect at least 19.8% of the move. That was the average IB rank. Over here, IB rank is almost 50. So I think that'll give us an edge. So if you want to put on a golden gecko here, sure, you can go ahead and put on a golden gecko here. You'll be fine. So why am I not doing one? That's because I already have one on there. Okay, so if you look, I'll clear this. I already have those golden geckos on already, which is why I haven't really I don't want to put on another position. So what can you do? Well, here's what I might do tomorrow. I'll do the same golden gecko here, right? Okay, and I'll move these. Oh, I'm sorry, darling. I'll move these out here. Now, because I already have these positions on, I can, if I'm bearish and I'm worried about it going to the downside, I can skew this to the downside. How do I do that? I can move these strikes down like once. See, now it's at 184. What if I do it twice? Because I already have a position here, right? Okay, so let's see if I move it down a little bit. There, I don't have a 183 position. I know I have a 192, I have a 185. So what if I skew it like this? Then I move this back out to the 2 standard deviation line right here. Let's see, just to keep it honest right there. Look, now I can collect 95 cents. Okay, and I'm bearish. So meaning I'm betting it'll stay below 207 and above 182. Okay, so here's the chart. 182 is where on the SPY? 182 is, oh, this is 186. Look where 182 is. It's basically down here. Okay, that's even below the 233-day moving average. Okay, so am I pretty fine? I feel I'd be pretty good unless there's something drastic and the market will really tank. Okay, so, and my expiration date would be the November expiration date, so that'll be further out as well. I gotta move this out here. So basically, I'm betting that the S&P 500 will stay above 182 and below 207 on this day. Okay, and I can collect 97 cents for that. So I've got about a minute left. Any questions? Give me a shout out at the on the forum or whatever. And I hope this helps. Give me some feedback. Let me know what else I can do to help you guys. Okay, so this is what I might do tomorrow, based on what I see, and collect more money and protect myself on the downside. Okay, hope this helps. Like I said, give me some feedback. Let me know what you like, what you don't like. I'll be glad to help you out. Thanks.